Awesome. Here we are. It's another full disclosure Thursday, and we're very lucky to have Stephen Klein here today because it's a full disclosure Thursday to talk about insurance. And Stephen, you have helped us in some complicated situations, which we're very appreciative of. And but insurance and hazard insurance for a single family home or a multi-unit building is key to doing a transaction. The lender won't give you the money until they know that the collateral is protected. But it is kind of getting a little bit more complicated, especially with, like, say, the Oakland Hills and some of these places where we're dealing with fire severity zones, or Napa, or Marin, or Sonoma, and these places where they've firsthand experience with
Berkeley's getting
this.
tricky too.
Berkeley's getting tricky too. So,
Right.
can you talk to us a little bit about just that high level of kind of the hazard insurance, which we hope people, don't end up in the situation where they have to get it, but some people are living on the edge of probably being mandated to get it.
Absolutely. So yeah, you're right, Eddie, and thanks for having me. So anytime a home is being mortgaged, the lender is going to require homeowners insurance or some sort of property insurance to protect their investment in the home. And so when I talk about homeowners insurance, I'm really talking about a variety of different packages, whether it's a landlord policy or a homeowner's policy or a condo policy or even a renter's policy. Those are all different types of homeowners insurance policies, and all of those can be put on personal lines forms for anything that's up to 4 units, which
Okay.
is really good background to have. The question that I get most often from realtors is this home insurable? And I will never encourage any realtor to put on an insurance advisor's cap and advise their clients about anything. That's an E&O risk, obviously. But here's something that you can rely on that is good information, and that is the state of California makes it that every home is insurable.
Ah,
A lot of people
okay.
don't know that.
Okay.
Now, the quality of the insurance that's going to be available and what it's going to cost are going to be
Will
the
vary.
variables,
Yeah.
obviously,
Yeah.
right?
Yeah. Okay.
But as the California insurance market changes relative to habitational risks, we're seeing appetites for the insurance companies shift, and where it used to be a lot easier previously to insure homes in the hills compared to in the flats. Now that's becoming more and more difficult. But one constant is remains, and that is every home can get insurance.
All
Wow.
right. Well, that's the so what are just ultimately the first off things that an insurance company takes into consideration when somebody, you know uh, is looking and shopping for insurance? Like, what is the insurance company looking at, and what should the homeowner be thinking about and looking at?
So for homes in the Bay Area, the two rating factors that seem to pop up most are for older homes is has the electrical system been updated? Older homes that have knob and tube wiring still are very challenging to get insured. Again, they're insurable, but the options for where to place that coverage is very limited.
Mm.
And then the other is proximity to brush. So obviously, it's more difficult to place a home in the hills than it is in the flats, and policies are rated as such. Um, One thing that I find kind of interesting is um, eligibility and rate on a homeowner's insurance policy is very similar to that of how the banks rate and make eligible. It's based on occupancy. And
Okay.
so the least expensive homeowners insurance policy would be an owner occupied policy. The thinking being no one's going to take care of the home like an owner occupant would, right?
Yeah.
And then the next step up from there would be a home that's occupied by a long-term tenant, any tenant that's got a 12-month lease. And then if they go month to month after that, that's fine. But the intention is that they intend to be there for a while.
Hmm.
Up from there would be short-term occupancy. So people that are renting homes out to Airbnb or VRBO, things like that. That's a unique risk that not a lot of insurance companies have an appetite for. So if your clients are going to be renting out their homes, either wholly or maybe an ADU, where it's going to be owner occupied partially and then rented on the short term partially, it's important to make sure that the right insurance company is on that risk and that the insurance company knows what's going on, because we never want to give an insurance company a reason to deny a claim. And occupancy would be a really easy one, you know.
That's it.
Obviously, the risk profile of a home that has 50 tenants in a year is different than a home that has one tenant per year, right? And then finally, the last risk profile is a vacant home. So
Yeah.
a home, for example, that we know is going to be going through renovations at the close of escrow, whether those are extensive renovations that include adding square footage or moving load-bearing walls, or just doing simple cosmetic changes. But if a home's going to be vacant for a while, it's got to be rated and on the right policy so that if there's a loss, the insurance company can respond.
Uh, Uh, out of you bring up a curious question there, because there we do have in the Bay Area various Airbnb regulations, and so if somebody was obedient to those Airbnb regulations in the sense that you don't rent out your home more than 90 days through that process, and let's say they're a regular homeowner and they like to go away for a month every year, and for that month every year, they rent out their house on Airbnb. And if they have not told their insurance company, is that a major risk for them? Like that sounds like that could be, if something were to happen at that moment in time, there could be a potential denial of coverage.
It could be. It's impossible to predict how any one insurance company would handle any claim. It's ultimately up to the claims adjuster. And I'm aware of situations where those do resolve positively, even if that beat was missed. Like, hey, we moved out for a month. There are also home swapping services
Yeah,
exist, where you trade your home with someone in Belgium for a month or
yeah,
something, right?
yeah.
Um, and so it is important to make sure that you make your insurance company aware of that. But I'm aware of situations where even when that didn't happen, the insurance company can work with the insured to make sure that a claim gets covered. But it's
Covered.
always better to be safe than sorry, right?
Sorry. So check in with your insurer. But if you're buying a property and you know you're going to be Airbnb-ing it, that you need to make sure you have the
Yeah,
right
and there aren't
coverage.
a lot of insurance companies that are in that space, so you want to make sure that you're with the right insurance company.
That's it. And then when you get into kind of costs and this kind of scenario, um, well, before actually I get there, I want to cover a question that comes up a couple of times a year with transactions when buying and people are buying and selling. Um, I think in the like many moons ago, your homeowner's insurance policy was like there to kind of cover you if anything went wrong. If little Bobby kicked a soccer ball through the sliding glass door and smashed the window, don't worry about it. Just call your friendly insurance company and they'll cover it. But nowadays, it kind of that can actually be something that can be kind of problematic in a sense that if there are a number of claims on a particular property, there can be a denial of coverage for new buyers coming in trying to get a policy where an insurance company does some research and they see that there's been a couple of claims in this property and they deny coverage. Can you speak to that at all,
Sure.
Stephen?
Yeah, claims can be tricky. What a lot of people don't know is that, or a lot of first-time homebuyers don't know, that most claims will affect your premium, and some claims might even affect your eligibility. And for most first-time homebuyers that don't have a loss history, they qualify for preferred admitted insurance, which is obviously the best insurance that's available. You're going to get the most coverage for the best cost.
Hmm.
And for my clients that qualify for that, I'm fiercely protective of that eligibility. And so my suggestion to my clients is that they is that they consider policies with higher deductibles because it controls, for one thing, it controls the types of claims that they're going to make, but it also controls the premium very well as well. Because obviously, as with most insurance, as with all insurance, the higher the deductible, the lower the premium, right? Because the deductible is the insured's participation in any loss, right?
Yeah.
And so beyond, so let's say,
So if
for
you
example,
have that higher deductible, the insurance company's like, we're not going to get nickel and dimed by this person, to so to speak, kind of for you
yeah,
loss of a better expression.
right.
Um,
And for those people who really, use their insurance for its true purpose, to cover something that's really catastrophic, that's unaffordable, it doesn't really make sense to buy down your deductible to $1,000, let's say. And when I say higher deductibles, I'm not talking about a $10,000 deductible. Most of my clients have $2,500 deductibles, which is very reasonable in my opinion. But one thing that it does is, sort of elevates the type of claim that you might make. For example, let's say you've got a real nice bike that gets stolen, right? It's a $6,000 bike, which is even on the low end of nice bikes these days. But let's say you have a $6,000 bike that gets stolen, and your deductible on your homeowner's policy is $2,500. If you make that claim, your insurance company might increase your premium $200 or $300 a year for up to 5 years. So now you've given back, on top of the $2,500 deductible, you've given $1,500 of that back. Now you're in for $4,000. You're only going to get $2,000 for that bike.
yeah.
And also, you've got this claim on your record where if you then have another claim within a certain amount of time, an insurance company might have a guideline that if you have a certain number of claims within a certain time period, then you get automatically non-renewed, right?
Yeah.
So the advice that I give to my clients is, if you're going to file a claim on your homeowner's insurance policy, make it count, make it a good one,
Yeah.
use the insurance for what it's really intended for, not for smaller claims.
I have a question about that though. If you are in that situation, how do you know how much your premium would go up? And like, how do you make that calculation without asking the insurance company?
That's a great question. That's why my clients choose to work with me, with an independent broker. My job, as an independent broker, I represent insurance companies. I'm the liaison between the insurance company and the insured, but I don't work for any insurance company. I work for my clients. So I have a fiduciary responsibility to my clients that I take very seriously, to make sure that I'm protecting their interests first. I obviously want to be a good partner to the insurance companies, right? So I'm sort of straddling that line, making sure that all parties involved have their interests protected. But ultimately, my clients come first.
Got it.
Yeah.
Good to know.
That's fantastic. And then to kind of give, so it almost sounds like when you have a insured profile, that it's kind of like getting life insurance, right? You're there, you're getting marked as super preferred,
You shop this,
standard.
Eddie. You know how it goes.
Yeah. So what is the variance? Like, what are the averages that people can kind of maybe, you get a 14, 13, 1400, 1500 square foot home in the Bay Area with kind of knob and tube wiring. What do we do? Should people expect to kind of see?
It really depends. There's so many rating factors that go into a homeowner's insurance policy. And quite frankly, in my opinion, what separates the good policies from the great policies aren't just the coverage limits and the premium, it's the endorsements. It's all of the things that make a really great policy. Every insurance policy is pretty much built the same way. The insurance company gives coverage, and then they take coverage back by ways of exclusions, right? And I often tell my clients that it's not so much what's in the policy isn't as important sometimes as what's excluded from the policy, what's excluded from coverage. And then you can add back a lot of those exclusions by way of endorsement. So it's the endorsements that really help round out a policy and make them really, really good. It's been my experience that, let's say, for an average, 1,500 square foot home that was built sometime in the 20th century, an older home, if it's in the flats, let's say, you could probably expect monthly premiums of maybe $100 to $200 a month.
Yeah.
I think would probably catch, maybe 75% of those
70,
homes that we're
yeah,
talking about,
70, 80% of it.
Yeah.
Totally.
And
And
then once you start getting up in the hills, like that could, double and triple depending on, the various rating factors. And we haven't even talked about earthquake or flood insurance, by the way.
yeah,
Earthquake and flood are excluded from all homeowners insurance policies. And by the way, when I talk about flood, I don't mean like a leaky pipe. I'm talking about like, water rushing through the front door, not being able to stop it, right? Um, but it's been over 25 years, I think, since there's been any significant seismic activity anywhere in California, Northern California or Southern California. And so, whenever we get these little rumblers, these 3.5, 4-point earthquakes, it really gets people thinking about earthquake insurance again, which is not required by the lender, which is, I think, a big reason why a lot of people don't have it.
Well, and
yeah,
we get that question a lot, like whether it's worth it because it's so expensive. Like on average, your California fault line seismic risk homeowner, how many people are getting it these days?
I think that the state average is under 20% of homeowners have earthquake insurance. In my opinion, I think it starts making a lot more sense as you start seeing more equity in your home, right? If you have so much equity in your home where it doesn't make sense to walk away from it because there's been a major earthquake and you don't have coverage and you don't have money to repair or rebuild, you have to walk away from that house. And you could be walking away from a ton of equity.
Yeah.
And so, and by the way, earthquake insurance isn't as expensive as most people think it is. What becomes undesirable about the policies is that the deductibles are different than a homeowner's insurance policy. The deductible on an earthquake policy is a fixed percentage of each line of coverage.
Mm-hmm.
So if you've got a home, let's say that we're insuring for $800,000 and you choose a 10% deductible, the first $80,000 of damage to the home is the responsibility of the homeowner, which is, that's a pretty significant. Yeah,
but that's where it makes sense. The more equity, if you're insuring a home for $800,000 and you've owned it for 25 years and you only owe 50K on it, then that's a sizable amount of equity that if it were to be destroyed, you would want it.
Yeah, and it's important to be mindful. One thing that trips up a lot of new home buyers is, typically in California, we're insuring the home for a lot less than its purchase price. And the reason for that is because insurance can only insure the improvements on the land, but we don't insure the land. So the difference is the land cost, obviously.
Yeah,
right?
yeah, it's the land. It's the land. Yeah, we always forget the point. People are like, really? Is this all I'm getting insurance for? And you're like, look, if it burns to the ground, you don't have to rebuy the land, but you do
Sell the
have
land
to.
if you don't want to rebuild, right?
Yeah. Which is what happened in Santa Rosa after the fires there. A lot of people chose not to rebuild and they sold their lots. They just took their claims and sold their lots.
And most insurance policies, most homeowners insurance policies have a provision that will also allow you to get some sort of relief if you choose not to rebuild.
Yeah. So, and I think you're bringing up kind of some of the key points is really, working with an insurance provider that can actually kind of analyze different policies and give you advice for your situation and scenario is really super important. Like it's not, I even though people will go online and kind of click a few buttons and stuff like that, I find having those probing questions and somebody listening and going, oh, hold on a minute here, you actually like to go kite surfing, that actually brings up an extra level of risk here, kind of scenario. So that
and that's part of the reason why I chose to be an independent broker and not be affiliated with what we call, for example, a captive insurance agency. I wanted to have options for my clients. When I do an intake with a potential client, I put all their information into an aggregator. I send it to 10 different insurance companies all at the same time. And I have premium indications from each of them. And so I know which insurance company is going to be the best fit for this product or for this home, right? They like the age of the home, they like the location, they like the loss history, they like the demographics of the occupants, their loss history, things like that. Um, and so, I wanted to be always be in a position where I could provide the best value for my clients. That's really my business MO is, making sure people get the most bang for their buck.
Cool.
Music to our ears, music.
Well, and
So
making you guys look good too. That's important.
yeah, it's hard. Some of it, it's kind of, I need all the help I can get to make me look good. So, uh, if is there anything that we haven't asked you and that comes up as just it's kind of one of those things that people don't know that they don't realize they don't know what they don't know.
We've covered a lot of good, really, really good information. Every risk is different. Every insurable situation is different. If you've spent a minute watching television in the last 20 years, you know that you get a discount when you bundle home and auto insurance. So trying to take advantage of those is always helpful. But there are some unique situations where bundling either isn't available or isn't the best option. And so again, when you work with an independent broker who's shopping the market, they're going to create the best situation for you. Does it make sense to broker shop? Not necessarily, although not every broker works with every insurance company. So sometimes it does make sense to talk to more than one broker. But if you find someone that you like, that you trust, just like a mechanic or your mortgage broker or anyone else, they're going to do their best business for you. I tell my clients, I love having you as a client, and I'm privileged to have you as a client. But I also want you to tell your friends and your family too, right?
Yeah.
So we're always going to do our best for our clients so that they tell their friends and family.
It that's the same motto by which we travel, Haley. So Stephen, where somebody is looking for you and they would like to ask you more questions or seek your advice or help, how do they find you?
They can find me in a myriad of ways. Our phone number for the agency is toll free 888-705-5181, and our website is www.greystone with an E, Grey Stone insured with a D on the end.com. So greystoneinsured.com, and my email is Stephen with a V, Stephen@greystoneinsured.com. And in case you haven't figured it out yet, we love talking about this stuff. So we're happy to help your clients any way we can.
Yeah,
I just have to personally say thank you, because you've helped clients that have purchased this year in very challenging areas with regards to wildfires and stuff. And it was hard to find somebody who could really evaluate properly and provide good service and provide a policy that works. So thank you.
My pleasure. Thank you for thinking of us. We really appreciate it.
awesome. And then Haley, in the dark, when somebody needs the light to find their piece of real estate or sell their piece of real estate, how do they find us?
Did you see I found my light?
Yes. Yeah.
Yeah. Well, the sun's going down. I didn't prepare for that.
Yeah.
They can find us at elevationrealestate.com, on our YouTube channel, Google Elevation Real Estate, and on Instagram at elevationSF.
This has been fantastic. Thank you. Thank you.
Thanks
It's
so much,
been
Stephen.
another great Full Disclosure Thursday. See you next week.